The Money MC. Every month, the money leaves your account. Health insurance, car insurance, life insurance. Sometimes renter's insurance, sometimes all four at once. And most of the time, you get nothing back.
He lets that sit.
That is the design.
Insurance is the only product in America where the company profits most when you don't use it. Every other product, food, clothing, cars, phones, generates profit from being used. Insurance generates maximum profit when you pay month after month and never file a single claim. That one fact explains everything about how insurance companies operate. Their incentive is to collect as much as possible and pay out as little as possible. That is not a conspiracy theory, that is a business model. And once you understand it, you will never deal with an insurance company the same way again.
Let me give you the numbers. The 7 largest publicly traded health insurance companies in America made a combined $3 billion in profits in 2024. A new record, up more than $500 million from 2023. $3 billion in a single year in profit. While millions of Americans skip medications, ration insulin, delayed care they needed. Since the Affordable Care Act passed in 2010, America's 5 largest health insurers have taken in more than $9 trillion in revenue and $1 billion in total profits. United Health Group alone, the largest insurer in the country, covering more than 50 million people, watched its annual profits skyrocket by nearly 400% over that period. And United Health reportedly denies nearly 1 in 3 medical claims from its own policyholders.
1 in 3.
The CEOs of those 7 companies took home a combined $6 million in compensation in 2024, enough to cover annual premiums for thousands of American families. The average employer-sponsored family health insurance plan now costs $26,993 per year, up 54% since 2015. The price of a brand new car every single year, just for the coverage, before you ever pay a deductible or a copay. And there is a term the insurance industry uses that tells you everything. They call the money spent paying your medical claims a loss. They call your care a loss. Your health is their liability.
I need to explain something called prior authorization. Prior authorization is the process insurance companies use to decide whether they will pay for a treatment, procedure, or medication that your doctor has recommended. The insurer requires approval before you can receive the care. If they say no, that is a prior authorization denial. Recently, nearly 17% of in-network claims on the ASA marketplace were denied. Now here is the number that should make you furious and then immediately motivated. When prior authorization denials are appealed, 82% are fully or partially reversed. 8 out of 10 reversed. When someone actually pushes back, and how many people appeal? Fewer than 1% of denied claims are ever appealed. The insurance company knows this. They have built their entire prior authorization strategy around the fact that you probably won't fight, that the process is complicated enough that most people give up, that exhaustion and confusion are their most effective tools. The denial is not a final answer. It is a test of whether you will fight back. There is also a process called peer-to-peer review. Your treating physician calls the insurance company's medical director directly, physician to physician, and explains why the treatment is necessary. This single conversation overturns more than 50% of denials. Your doctor's office can request it. Many people never know it exists. The system is not designed to be fair. It is designed to be exhausting. Know your rights. Use them. Life insurance is one of the most important financial tools a family can have. It is also one of the most misunderstood and most aggressively missold. There are 2 main types. Let me explain both in plain language. Term life insurance. You pay a set premium for a specific period, 10, 20, or 30 years. If you die during that term, your family receives the death benefit tax-free. If you outlive the term, the coverage ends. No cash back, pure protection. Simple, affordable, does exactly what it says. Whole life insurance. You pay significantly higher premiums. The policy never expires as long as you pay part of the premium funds. The death benefit part goes into a cash value savings component that grows slowly, typically 2 to 4% per year. The cost difference is dramatic. Whole life can cost 5 to 10 times more than term life for the same initial death benefit. Here's the question you need to ask. Why is whole life pushed so hard? Because it pays agents dramatically higher commissions than term life. For most working families with children, a mortgage, and a need to protect their income, term life insurance is the right product. Take the premium you save by choosing term over whole life. That can be $200, $300, $400 a month, depending on the coverage amount. Invest that difference in a low-cost index fund. The market's historical returns have dramatically outperformed the 2 to 4% growth of a whole life cash value account. This strategy is called buy term and invest the rest. It is the standard recommendation of virtually every independent financial expert. How much life insurance do you actually need? The standard guidance is 10 to 12 times your annual income. If you earn $60,000, you need $600,000 to $720,000 in coverage. A 30-year, $500,000 term policy for a healthy non-smoker in their mid-30s costs roughly $25 to $35 per month. You can get quotes in minutes at comparison sites like Policy Genius or Select Quote. Most people who need life insurance are either paying far too much for the wrong product, or they have no coverage at all. And life insurance is priced on age and health. Every year you wait to get covered costs you more. Get covered now. The right product at the right price.
Yo, the Money MC. Here's what you need to know about insurance. 1, never accept the first denial. Health insurance. Insurance companies often deny claims initially, hoping people will give up. You have the legal right to appeal within 180 days, and many denials are reversed when challenged. Ask your doctor to provide documentation proving medical necessity. 2, request peer-to-peer review health insurance. Your doctor can speak directly with the insurance company's medical reviewer to explain why treatment is necessary. This process often leads to approval and usually takes only a few days. Many patients don't know this option exists, so they never use it. 3, document everything. Health insurance. Keep detailed records of every interaction with your insurance company. Write down dates, names of representatives, and what was discussed. Having documentation protects you if the insurer changes their story or makes an error. 4, request external review health insurance. If your appeal is denied internally, you can request an independent external review. This review is done by a neutral third party, not the insurance company. It is one of the strongest consumer protections available. 5, know your out-of-pocket maximum health insurance. Your out-of-pocket maximum is the most you must pay in a year for covered services. After reaching that limit, insurance pays 100% of additional cover. Cost planning procedures within the same year can help you save money once you reach the limit. 6, shop every year car insurance. Insurance companies often raise prices for loyal customers over time. Getting quotes from multiple companies each year helps ensure you are not overpaying. Switching insurers can lead to significant savings. 7, raise your deductible car insurance. Choosing a higher deductible lowers your monthly premium. Since most people barely file claims, paying lower premiums over time can save more money. Keep the savings in an emergency fund in case you need to pay the deductible. 8, drop collision coverage on older vehicles. If your car's value is low, collision coverage may cost more than the benefit you would receive. Insurance only pays the current value of the car minus the deductible. Removing unnecessary coverage can reduce expenses. 9, ask about every discount car insurance. Insurance companies offer many discounts.
but they are not always automatically applied. Bundling policies, having a good driving record, or driving fewer miles can reduce your premium. Always ask what discounts you qualify for. And buy term life investor life insurance. Term life insurance provides affordable protection for specific periods such as 20 or 30 years. It is usually more cost effective than whole life insurance. The money saved on premiums can be invested to build wealth over time. 11 get covered now. Life insurance. Life insurance becomes more expensive as you age or develop health problems. Buying coverage earlier locks in a lower price. If others depend on your income, getting coverage sooner protects them financially. 12 get renters insurance. Renters insurance is inexpensive and protects your personal belongings from theft, damage, or disasters. It also provides liability protection and may cover temporary housing costs if your rental becomes unlivable. Many renters overlook this simple protection.
Yo, the Money MC, Baltimore MD, Washington DC, Pittsburgh PA, Long Beach California, Crips in the Hood VC.
Insurance exists for a real reason.
The right insurance at the right price for the right risk is one of the most important financial tools a family can have. A single medical event without coverage, a house fire without renter's insurance, a death with no life insurance, and children at home. These are the events that destroy financial lives in a single moment.
Insurance is protection against the catastrophic. That function is real and it matters.
But the industry that delivers that protection has one goal:
To collect as much as possible and pay out as little as possible.
That means higher premiums every year, narrower networks, more prior authorizations, more denials, more complexity,
Designed to tire you out and make you give up.
more products sold on commission that benefit the agent more than they benefit you.
The answer is not to go without insurance.
The answer is to become someone who understands how the game works.
Get the right coverage at the right price and know exactly what to do when they try to deny you. That is what you know how to do now.
The insurance industry profits whether you win or lose.
Now you know how to make sure you do.
Subscribe to the Money MC.
Share this with someone who needed to hear it.
Stay smart, stay solid.
Stay free.
We out.